Let's move on and let's talk about which are the stocks that are in focus and are featuring in today's BNSN stock cloud of the day. And like Alex gave an overview of the markets, the banks are the ones that are selling the most today. So you have banks like HDFC Bank that is actually in focus on back of this Q4 operational performance. Indusind Bank, Yes Bank. All of these banks have come out with their Q4 operational performance. Apart from that, you have the PSU banks that are actually falling quite a bit. You have Cadila Health, that particular counter is in focus as Zydus Cadila, a unit of the company, has said that it has sought for the drug regulator's approval for its COVID drug, Hep. They've said that it is showing promising results in treating COVID-19. Apart from that, you have SAIL, that is Steel Authority of India, that's in focus. They've reported their highest ever quarterly production and sales during Jan-March quarter, helped by strong demand. You also have Adani Ports that's in focus. They've said that they've inked a pact with Vishwa Samudra Holdings to acquire the remaining 25% stake in Adani Krishnapatnam Port for 2,800 crore rupees. Apart from that, like Alex also touched upon, and like all of us know, there are increased restrictions in the state of Maharashtra on back of the rise in COVID-19 cases. So on back of that, you have PVR, Inox Leisure, specialty restaurants, as well as Phoenix Mills and United Breweries that are bearing the brunt of it. You can see all of their stocks are declining in trade. You have also Britannia that is in focus as they've declared interim dividend of 62 rupees per share, and the record date for dividend payment is April 10th. So these are the stocks that are in focus today, and they find a mention in BNSN stock cloud for the day. All right, let's get on board. Then our guests for today, we have Kunal Bothra as well as Vijay Chopra joining us. Good morning, gentlemen, and thank you for waiting by. Kunal, I'll come first to you. What do you make of the overall market picture? If you look at the Nifty Bank, definitely bearing the brunt, most of the brunt in today's trading session. So give us an overview of how the charts are looking for Nifty Bank, and also what are your high-risk ideas for our viewers today?
So good morning, Cheryl. Last week I was indicating that there was a very interesting data point for the Bank Nifty, which was a rise of 25% of open interest in just a matter of 3 days. Now, in fact, what topped out on Thursday was a reduction of 36% on the open interest on a single day of Bank Nifty. Now, this is one of the largest drop in the Bank Nifty open interest on a single day, which means that the shorts were sort of trapped on Thursday previous week, and then today you've seen a fall right from the word go when the markets open on the downside. So this generally indicates that after trapping the shorts, we're now going through a downward trend. In fact, on Thursday as well, if you remember, in many of my stock picks, I changed my stance from an all buy to a mixed approach on the markets, expecting that Bank Nifty would probably go through a downward drift. Now I continue to have a stance which I would expect that the Bank Nifty would continue to go through a short-term correction further from current levels. So I'm suggesting two sell calls. First one, which I'm suggesting, is a sell on Axis Bank. Now, private sector banks have been struggling. Quite evidently, you've seen many of the private sector banks taking resistance at their midterm moving averages and failing to cross over that. Axis Bank is one of the stocks in the same category. Would suggest a sell on the stock. It's formed a fresh swing low for itself. So sell with a target of 650. Stop loss could be kept at 704. The second stock which I'm suggesting is a sell on SBI. In fact, on Thursday previous week on the same show, and reiterated a sell on SBI, expecting that the stock would break below that 350 mark. I think it's very near towards breaking that 350 levels today, and I would expect some more downward drift into the stock price further. So the failure of the stock breaking past above its 50-day moving average is acting as a major hurdle and a resistance for SBI. Keeping that in regards, I would expect that the stock would correct to at least 336 to 342 range over the near term. So sell with a target of approximately 336, 342 range, and stop loss could be trailed to 357 on SBI.
Indicator of the mood in the markets. Kunal, both of your calls today are sell calls. Let's, on that note, go over to Vijay Chopra, the Managing Director and CEO of Enoch Ventures. Thanks so much for joining us, and good morning to you, Vijay. Just to get a sense from you, I think a lot of people say that bouts of selling provide a good opportunity for long-term investors. Would you, however, say that it's a pragmatic approach to just wait till the dust settles, till we know the extent of this second wave before you jump into a few strategic names? And what do you picks for our viewers today?
You know that corrections are a part of the bull market, and we are in a long-term bull run, and there is no two thoughts about it. And I think that this sudden increase in the COVID cases, and primarily we have this concentrated surge in the COVID cases. About 60% of the national cases are coming from Maharashtra only. So I think that the Indian think tank needs to get into action. The central government along with the state government should take very stringent steps to control it. Now we have the vaccine at hand also, which was not the case earlier. So there is definitely some respite. So I think that market at times it exaggerates the fear and it exaggerates the celebration also. So it's a pendulum-like movement in the market. So I would say that this too shall pass, and definitely, as you said, the dust would settle, and I would not be worried if the markets do not breach the March low of 14,260 to 70 odd. So if at all it is not breached and the markets rebound from there, I think that I would be very comfortable, and we would start buying. But as of now, as you're asking me that what would be your pick in today's market, I would prefer to stay conservative and be with IT companies, and I think that HCL Tech trading at 1010, it looks good for a target of 1100. And my second recommendation would be Wipro, which is trading at 425. It could be bought for a target of 450.
All right, and that's Vijay's take on the market, saying he prefers to be conservative and would rather stay with the IT space. All right, on that note, Vijay as well as Kunal, hang in there. We'll take a break on this edition of Buy Now, Sell Now. But once we come back, we'll come back with viewer queries, so don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now. Quick check on how the markets are faring. And in fact, over the past 20 minutes or so, we've seen a bit of an intensification of the selling. You have the Nifty 50 that's now losing even more ground, down over 2.5%. And I think quite a bit of that selling is coming in on the financial names. In fact, the Nifty Bank on the whole down about 4.4% in trade as of now, looking quite weak. And the IT pack is the only one that is standing in the gains right now, up about 0.3%. You have the media index that is down as much as 5%. So quite a few names that are taking a battering in trade today. You have the India VIX that has spiked by quite a large amount. In fact, it is above 23 as we speak right now. But that's a good opportunity for us to get into the query segment, and a few queries have come in. Gentlemen, Pallavi Shah has written in asking the first query, and I think this is one that I would like to take to you first, Vijay. And this is something perhaps that is occurring to a lot of people as COVID cases surge. Should you buy names like AstraZeneca and Dr. Reddy's laboratories? Now, we know that Dr. Reddy's laboratories is in contention for the Sputnik 5. It's not yet gotten that approval. AstraZeneca is another name that is associated with the vaccine. But in any case, we're not changing the number of vaccines that need to be doled out, right? So a rise in cases shouldn't change the picture at all.
Well, yes, I think that if you ask me about AstraZeneca and DRR, Dr. Reddy's apple-to-apple comparison, I think that Dr. Reddy's looks much better. And even another stock called Cadila Healthcare, we can also pick this company because it has also filed for the approval, which Cadila hasn't fallen much, and Dr. Reddy's has fell down quite a bit. So I would say that Cadila, Dr. Reddy's do look good for a longer term period. and the risk reward is positive. So again, we are awaiting the response for Dr. Reddy's, and it would take some time for Sputnik to go full throttle. But I think that as a company, the capabilities of marketing it and developing it both. So Dr. Reddy's definitely has an edge. So I would recommend Dr. Reddy's over AstraZeneca, and Cadila also looks good.
From Vijay on AstraZeneca, Dr. Reddy's as well as Cadila. Kunal, how are the charts for AstraZeneca as well as Dr. Reddy's looking like at this juncture, given in that most of the movement is also based on the news, as well as pharma sector has rallied ever since the pandemic. So how are the charts now looking for the pharma players?
I think if I specifically look at these two names, AstraZeneca and Dr. Reddy, AstraZeneca chart looks a bit more stable. The stock has a history and a rather very good history of moving into stronger degree and stronger years, stronger periods of uptrend, which have lasted for many years to come by. Same is the case with Dr. Reddy as well. In fact, I think the good part about the stocks for both AstraZeneca as well as Dr. Reddy is that these stocks are available, almost 25 to 30% off from their 3-month, 4-month highs. So I think in that aspect as well, they are at a crucial support zone. Now, the third and the most important reason why I believe that a tilt towards pharma stocks at these levels could probably actually play as a good strategic move for portfolios is because the market tilt has come back into defensives. Now, whenever the market tilt gets back into the defensive mode, we've seen that the high beta sectors like the banking, etc., they would tend to underperform, and the defensive sectors and stocks like the pharma, etc., they would tend to outperform. So I think in that aspect, it's good to stay with large cap names like Dr. Reddy, etc. And I think it's also good to stay with more defensives if the market gets a bit more choppier. So I think in all those three aspects, I believe both these stocks look attractive to me on charts, and especially the fact that both of these stocks are already gone through a correction in the last 2-3 months.
Coming in on AstraZeneca, Dr. Reddy's, as well as the pharma space from Kunal as well. Let's get on board our next viewer query, and this is from Mirza Hussain from Bengaluru, saying that he's a retail investor, retail and a short-term investor. He's bought 2,000 shares of Biocon at 438 rupees per share, and he's bought 3,000 shares of Bandhan Bank at 341 rupees per share. He wants to know whether he should hold or exit from these holdings. Kunal, I'll come first to you on Biocon as well as Bandhan Bank. Yes, no doubt it's seen a drop from the buying levels, but what should our investors do with both of these holdings?
Biocon specifically, I think the stock is going through a grind. I think if I'm not wrong, in January mid somewhere there was certain sort of a negative news flow which had come out for Biocon. I remember that the stock had dropped down almost 10% or 13% on that single day, for the stock. And post that selling has played more like a hangover for the stock. And the high of that day, which was made for Biocon on that single day, that high has not been breached decisively. So there were 2-3 attempts, but all those 2-3 attempts they sort of came out as a failure, and you saw the stock reversing back sharply on the downside, which means in effect that the stock has a lot of hurdle and resistance at this 430 and 445 kind of a zone for the stock. So for any kind of a new trend to emerge, the stock has to absorb this kind of a gap and then move up higher. So I think till at least as of now, it doesn't look like the stock has firepower to move past about the resistance. I would suggest that hold on to it for the near term. Keep a watch on it. I think the stock breaks past about this a hurdle zone or a gap zone, then I believe you should look at increasing your investments, even if the stock moves up higher from your initial purchase price, because then you would be buying on momentum rather than buying on a dip, which may not be a good strategy for Biocon. And I think similar would be the case with Bandhan Bank as well. The stock is reeling under selling pressure. It's struggling to hold on to its 200 moving averages. Trends are weak for the stock. I would suggest that wait for Bandhan Bank. Would not suggest a buy at current levels, but let the stock break past about some major hurdle zones. I think the immediate hurdle for Bandhan Bank is around 375. So I would suggest a buy only if the stock crosses about the 375 hurdle.
All right, Kunal, coming back to you on this next query first, and it should be interesting. Alwyn Pinto has written in asking about ITC, and he's in it for the long term, but basis the recent correction, in fact today's correction specifically, down about 4%, he's asking if he should exit. I remember, if I'm not mistaken, you had picked ITC about a week or so back, and you'd said that it is a strong contention for a buy, if I'm not mistaken. Has that changed right now?
What I was, in fact, I'd also done a chart buster segment for ITC, indicating that how the stock is forming a range shift behavior. So by range shift, which means that the stock moves into new territories of range and it starts a new uptrend for itself. So, Alex, what happened was for ITC from mid of 2020, the range for ITC was approximately at 150, 160 as the lower end and 200 approximately as the upper end of the range. So it was this 40-50 point band for the good part of 2020. Or it is the second half of 2020. Start of 2021, when this 200 hurdle was actually broken out, you saw the stock moving into another 40-point range, which was shifted on the upside. So then 200 became a support or a floor for ITC, and 240 approximately became a resistance. In fact, if you look at the high for ITC, which was made, I think, on 5th of Feb 2021, if I'm not wrong, the high was exactly at 239.2 or 239.3. So that itself tells you how this range shift behavior has worked out for ITC. So my sense is that I think the stock should hold on to the support of 200. And if you're looking to buy, in fact, in the calls which I had indicated earlier for ITC, I had mentioned that around 210, 208 levels is where you will see some strong demand arising for ITC and some good risk reward, as well. Keeping a stop loss of 200, and I would expect that the stock over the next few months or maybe over the next 1 or 2 quarters could probably come back to 240 levels.
All right, fair enough. I did forget to ask Vijay the previous question. Now, let's go back to that. Biocon and Bandhan. We got Kunal's view on this, but since this is a short-term investor, perhaps you can give him a sense as to how much this should be held on for, and what is your view on Bandhan and on Biocon for that matter?
I would take all the three stocks together, ITC, Bandhan and Biocon. I think that there should be a strict stop loss of 363 in Biocon. Although I am a firm believer that this is a great company having a great management. Kiran Majumdar-Shaw is one of the best, corporate head honchos today in the country, and the company has had a fantastic run over a period of time. And the company is doing some fantastic work in APIs and biosimilars, and so the product line is very exciting. So I would say that there are times when stocks consolidate for a long time, and probably Biocon is under a stage of consolidation. But there are stocks which can jump up within a month or so. So keep a stop loss of, as I mentioned, 367, and keep on holding the stock. So I think that this can come up quite nicely. Number 2 is Bandhan. So one thing I would like to say, Alex, is that we are in a stage where we might hit a situation where we might see hyperinflation. And whenever we see hyperinflation, the books of economics say that the financials are the most dreaded in those times. Secondly, we are having a second bout of COVID cases, which definitely is threatening the banks and the businesses, because banks are worried that whether its money is going to come back or not, or if we are heading into another lockdown or partial lockdown. So banks and financials are very, very worried. So I would say that Bandhan Bank, you get out on rallies and stay with the commodity stories. So it's better to be with the metals, better to be with the agri commodity stories, better to be with chemicals. So these are sectors to be rather than being in banking. Finally, I would like to recommend on ITC. It is one of the greatest stock at the greatest valuation available today. I remember in 2010 or 11, when we saw a sudden spurt in Hindustan Lever from 200 odd to it went up to 900 odd. So there are stocks and companies which are consolidating for a longest period of time, and there's a huge pain involved as far as the investors go. But let me tell you, ITC is a great company. There is a demerger story which is brewing. If at all it happens, the cigarette business, hotel business, paper business, apparel business, they are demerged. And FMCG, of course, which is one of the major players nowadays. So if they get demerged, there's a lot of value unlocking which is going to happen in ITC. Just stay invested in ITC, and I would not even, I would say that we can get a fresh entry into the stock around this level 210 and 211. It's not at all a bad deal. It's at a great valuation. It's a dividend yielding stock, debt-free company, great business, 100 years of legacy. So what else do you want in a company? So just stay invested in ITC. So all these, all these years, if people have held, just have some patience. I think that, demerger is around the corner.
All right, that's the view coming in from Vijay on Biocon, Bandhan Bank as well as ITC. Let's move on. Let's get on board our next viewer query, and this is from Nagesh Borugu. He's saying that he is rather asking for a long-term as well as short-term view on JK Tyres as well as Coal India. Kunal, I'll come first to you on both of these counters. JK Tyre last 1 year has been really good for the company, but last 1 month we've seen a sharp drop coming in JK Tyre's stock price. Meanwhile, Coal India has seen a pretty dismal performance over the last 1 year compared to what the other metal counters have done. So what is your view on both of these counters, long term as well as short term? How are the charts looking like?
Names Cheryl, for JK Tyre specifically, I believe the stock had done fabulously well from being a stock which was at 30-31 rupees March of 2020 to being a stock which was almost in the touching distance of breaking that 150 mark. So a return of more than 4.5 to 5x from the previous year lows, I think is a spectacular return. So what you saw in the last 2 months for JK Tyres was just a minor retracement of that rally which the stock had seen, and these kind of minor retracements they turn out to be good buying opportunities, and specifically for someone who has a more of a longer term time horizon. So I think in that aspect, buying on dips for JK Tyres could be a good strategy. In fact, I would suggest that if the previous month low, which is around that 96-98 mark, if that gets broken out, I think that's the first tranche of strong buying which could be done from a longer term perspective for JK Tyres. For Coal India, the outlook is completely contrasting. I would suggest that you should not venture out into this stock, at least because the technical outlook is not very attractive. Remember that Coal India was one of the few stocks which still gave a sort of a negative return. The stock did not bounce back quite sharply. Even when you saw a lot of these other PSU stocks rallying up significantly higher. And in fact, right now, when we're talking, the stock is now on the verge of breaking below the 200-day moving average, or I think it's just about done that as well. So you've seen the inherent weakness in the stock price for Coal India. So I would have my reservations over here. I would probably expect that Coal India could continue to underperform. And if you're looking to invest in some other, say, PSU stocks specifically, then I would suggest maybe look at something like BEL, Bharat Electronic. I think that stock looks attractive on the longer term timescale charts.
All right, BEL is a pick. Coal India has underperformed last 1 year, down about 6.5% at a time when the benchmarks have rallied over 70%. I'm going to go over to you, Vijay, on this one, and I'm interested to hear your view on this one. So from the tyre stocks, of course, JK Tyres, what's the view there? And Coal India, is there some reason to have interest in this? Any mitigating circumstances that you would say?
I would take up the JK Tyre. I think this gentleman wants to get into JK Tyre. Although it's a great company and it has shown a stupendous run over the last 1 year or so. But I think that there are better companies available. I think Apollo Tyres, which is trading at about 220, 22 right now, looks much better placed, and it is a bigger company than JK Tyres, and it has a bigger market share as well. So if you want to be in the tyre space, so be with Apollo Tyres rather than JK Tyres. So although JK Tyres is a great company, but again, it has gone up considerably, and while Apollo Tyres, I think, still has a lot of steam left. Secondly, EV or no EV or normal, vehicles which we have, tyres are going to be here for a long time. So I think that tyre companies should not be hit as there are other fears related to EVs. So tyres should do well. So Apollo Tyres looks better. Again, Coal India, I think that this is a stock which which runs up in the month of March, and we see a couple of times in a year when this spikes up, and March is one of the seasons. So I think that no point of being in Coal India. So if at all you see a surge on any good day, you get out of Coal India. There are better stories available to be rather with the steel companies, with iron ore companies. I think that stocks like NMDC, stocks like KIOCL, stocks like Tata BSL, these are great companies to be in. And even JSL Hisar, Jindal Stainless, JSPL, JSW Steel, these are great companies. So if you want to be for the next couple of years, I would say that commodity stocks should do well, and I think that steel should be benefited. Hindustan Copper is on upper circuit, was on upper circuit today. So metal stocks seemingly look good for at least 1.5 years. So stay invested in metal stocks, and I would say get out of Coal India for sure, because I don't see any steam there. So once we see a good markets if you recoup, so you can exit Coal India and get into some good steel or metal company.
All right, Vijay, on that note, thanks so much for joining in and sharing your views. Steel companies are what Vijay thinks are the bet to place in this current market. Kunal, as well, thank you so much for joining us, gentlemen, and have a lovely day. Let's take a check on aviation now, and that is a sector that is in focus on account of the surge in COVID-19 cases that we are currently witnessing. One might have thought a few months back that we're going to return perhaps to normalcy earlier than we had initially thought, and therefore I think a few of these aviation companies would have been gearing up for a higher load factor in the holiday season. That has not come to pass. In fact, some of them are struggling with keeping their load factors higher. Utkarsh Chaturvedi is joining me now. He tracks the sector very closely. Utkarsh, I think one of the key aspects to bear in mind for these stocks, for these companies, is how do they control cash burn in the event that there is a further restriction on air traffic?
Exactly. In fact, Alex, if you look, what's happening is that the load factors have been coming down from 15th of March is what the officials from the airlines tell me, that they were expecting it to be around 65 to 70% once March ends. And if you any of you would have traveled in the last week by air, you will realize that the load factors are visibly low. And that's what we've been told as well, that it will be around 65, 70. In April, now they are expecting the loads to go below 60, given the new lockdown measures, the amount of numbers which are coming. People are not really very comfortable at this point of time to leave their cities. They want to, it's again the whole same thing, that they want to be in the city. They don't want to travel much, and that is why the load factors in April can go below 60. What's happening also is that there will be more. There'll be more cancellations of flight, or maybe rescheduling, because if there are, say, 3 flights from Bombay to Delhi operating at a 60% load factor, what the airlines are now doing is really combining these 3 into 2. If there are 2 which is less than 50% load factor, they'll combine into 1. So that is what they're also looking. As you said, cash is king, and to retain cash is very important for them, to make sure that they cut costs. So to increase loads and to cut cost of ATF, what they'll do obviously will cancel some flights, most importantly reschedule some flights. So this can be a possibility that if you're really booking your flight, it might not end up flying at the same time, or you might get a new time. And that is something which has started happening already. But with the recent lockdown coming in Maharashtra, if you look at the numbers across the country, you'll realize the fact that there can be also a case that airports and state governments might also impose some restrictions. So that's also a fear really looming over the airlines at this point of time. So as you said, last month when we were speaking to the airlines, they were speaking about how the capacity is not full and we can operate at more. Bombay is not operating at full capacity. All those stocks are now completely reversed in a matter of 15 days, and now they're speaking about lesser loads and loads really going below 60%.
All right, Utkarsh, thank you for getting us that story, the exclusive story on how the load factors are likely to dip on back of rising COVID-19 cases. We've seen the airline stock also bear the brunt in today's trading session as well. Moving on, now that the cyclicals are making a comeback, should one reorient their holdings? Listen in to what Chris Wood of Jefferies had to say.
No, you own banks, but I mean, I think if you're an Indian domestic investor, you also need to own some stocks which are beneficiary of higher commodity prices, particularly oil prices, because rising of all, apart from COVID, the other biggest macro negative headwind for India in the next year could be a rising oil price. The reason why the oil price can really rise a lot, even from current high levels, is the lack of investment in the energy sphere because of all this anti-fossil fuel sentiment. So we have a very strange situation where oil companies are being encouraged not to invest in oil, but the world still consumes oil. So if the world still consumes oil, but people are encouraged not to invest in it, it means the oil price is going to go up. And the other issue is that shale oil production is declining, in my view, for geological reasons, that they've already exploited it. So I think there's a potential in a fully reopened economy for oil to go into above $100 again. So that, I think, is a headwind for India. So to me, you want to hedge that risk in an Indian equity portfolio.
All right, Chris Wood, in a recent report, of course, talking about the fact that lockdowns are not priced in the valuations here in India, and that could be something to watch out for on the downside. On that note, let's take a short break. We'll be back on the other side with a lot more, so do stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's talk about stocks, and let's talk rather about a sector, and that is the auto sector. Let's recap how the sales numbers were for the month of March. Vivek is here with the entire roundup. Vivek, looks like the hope of sustained demand recovery seems to be intact for the auto sector.
Well, a whole host of auto sales figures that came in post-market hours on Thursday. Eicher Motors again coming in slightly below what the 18-hour poll was anticipating. The auto motorcycle sales coming in at close to 66,000 versus the 18-hour poll of 75,000 units. Remember, the poll itself was quite muted as far as the two-wheelers were concerned, given the fact that two-wheeler registrations data across the month was quite weak, and the print read across also was quite weak. When you're talking about Hero Motor coming in closer to the 18-hour poll, coming in at 5.76 lakh units, up almost 72% on a year-on-year basis. TVS Motors coming in at close to 3.22 lakh units versus the 18-hour poll of 3.13 lakh units. When we're talking about Atul Auto, again a 60% rise, the number coming in at close to 1,751 units. When you're talking about Bajaj Auto, again a good jump up year-on-year, 52% up on a year-on-year basis. 3.69 lakh units is the kind of figure that Bajaj Auto managed to deliver in the month gone by. Now, Jefferies has written a note as far as how exactly the auto industry has performed. They're saying that the entire auto space has witnessed good sales, wholesales across most segments in March. Also remember, the year-on-year growth, according to them, was boosted on the lower base due to the COVID-19 that we saw last year, same time, same month. Also, what they're saying in terms of registration data, PVs grew almost 9%, two-wheelers rose around 5%, tractors grew almost 40%, even when compared to March 2019. So when you're seeing 2 years down the line, again, there has been good growth. So what they're saying is that the domestic two-wheeler growth was almost entirely led by Honda, and that is again another thing that they're keeping an eye out for.
All right, thanks so much for that update, Vivek. Let's shift gears now and talk about the primary market. It has been buzzing of late, and in fact, it is buzzing in the month of April as well, starting with the IPO of Macro Tech Developers. And if you're not familiar with that name, you're definitely going to be familiar with the name Lodha. And that is a company, in fact, that is going to be launching its IPO in just a couple of days. Vinny Motiwala is joining in to tell you all about the details. Vinny?
Macro Tech Developers, which was formerly known as Lodha Developers, is going to be kickstarting the IPO bandwagon in FY22, set with its public initial public offer coming in on April 7th. Now, this is the third attempt by this Mumbai-based firm to actually come out with its IPO. Nora had previously, weighed its listing in 2009 and 2018 as well, but those plans were mainly deferred due to the unfavorable market conditions. Now, Macrotech Developers is one of the largest real estate developers in India by residential sales value during FY14 to FY20, and the company is planning to raise around 2,500 crores through this offer. The money is going to be mainly used, which they'll be raising through the IPO, will be mainly used to cut the debt, as well as also the company is looking to further for capex funding for future growth via land acquisitions as well. So something that we'll be keeping an eye out on. Currently, the company does have a debt of 18,700 crore rupees. So how much of that will be used for the debt is something we'll keep an eye out on as well. And obviously, they have a presence across all categories, whether it's including mid-size as well as luxury as well. So surely broad-based, business of theirs across all categories, and the company has also forayed into the London business in 2013 as well. So the London market is also something that they have forayed into. So let's keep an eye out on Macrotech Developers IPO coming out on April 7th.
Right, thank you, Vinny, for taking us through the details of Macrotech Developers IPO. All right, and we told you first, and now it's official, and this is a story with huge implications. The government has released Insolvency and Bankruptcy Ordinance, approves pre-packaged insolvency resolution process for MSMEs. Karishma, who broke the story first, joins us now with the official details. Karishma, a very significant move. So what are the implications, and what is the government saying now?
Well, right, it's an 18 Now news break confirmed, and we are talking about the much-awaited pre-packaged resolution framework for, of course, the MSMEs that IBC and the government had been working on. MCA has been working on this since long, and we broke the story in March to you that government is looking to introduce a relief measure and relief resolution framework for small enterprises and distressed enterprises due to, of course, what has happened in COVID lockdown. Now, this pre-packaged scheme, let's first understand a pre-packaged scheme. A pre-packaged scheme is a famous legal framework that works in the US, UK and Canada to name. And now India has adopted this, which means that the government in a period of 120 days will try and solve the case out of court before taking in NCLT's intervention, where the corporate debtor and the creditor both within a period of 90 days will prepare a resolution framework package, a base resolution decision, and will submit it to the resolution professional, who will then submit it to the adjudicated authority. This is more a kind of resolution that will cater to distressed companies of up to 1 crore, where the process is going to be simpler, easier, and will not take much time, where the companies can try and sort out their issues quickly without reaching to the point of liquidation. Of course, there are certain concerns to this process, but it's good news, keeping in mind that most MSMEs have faced a lot of distress during the lockdown.
All right, thanks so much for that update, Karishma. Now, let's speak about Mahindra and Mahindra a little bit, because there was a change of guard at Mahindra, right at the top, right at the helm. You had Pawan Goenka making way for Anish Shah, who's taken over as the Managing Director and Chief Executive Officer. And he spoke to the newspaper, Economic Times, recently, and he spoke about what his plans are for the future. And among the statements that he made, perhaps one of the most significant was one that related to the banking sector, and something that the group is not really present in. It is present in the form of Mahindra Financial Services, but it is not present in the form of a bank. And there is, remember, talk of large corporate houses being allowed to foray into the banking space ever since that internal working group came out with a report that suggested that this be allowed. You have Anish Shah saying that M&M could look at applying for banking license and would meet all the criteria for a banking license. He also said that things have turned around since the first quarter of the previous financial year. After the COVID setback, things are looking better right now. Electrics would be the biggest focus area for the automotive division of Mahindra and Mahindra, and they're also open to tie-ups that will help them go global. That has been a strategy in the past to expand market share in the Indian market as well as in markets abroad. Mahindra Holidays, he says, will need to grow much faster. Now, that's just a glimpse of what he said. You can, of course, find more in the article that you will find online on Economic Times. Let's talk about an ET Now insight then, and go to Jayesh Khilnani, who's joining in to tell you how the seasonality in April has affected stocks.
Traditionally, the month of April has been a strong one for Indian equities, with the Nifty rising 5 out of last 5 times in April with an average gain of more than 1%. The Nifty Bank too has risen about 2.5% on an average, but it's the broader market space that has really rejoiced this month, with the Nifty Small Cap and the Mid Cap Index gaining about 2 to 3% each on an average basis. Moving on to the sectoral performance, watch out for the Nifty Real Estate Index, because that's the one which has surged more than 5.5% in the last 5 years on an average, followed by the Nifty Metal Index, which has been at the top of everyone's radar at the moment. That too has gained about 3% on an average. And then you have the Nifty Energy Index that has surged more than 2%, while you have the Nifty Auto, FMCG, Financial Services, along with the Infra Index that has gained more than 1.5 to 2% each in the last 5 years. Talking about the stock gainers, there's a mix of mid-cap as well as large-cap names that feature in this list. Let me start off with the ones that have gained the most: Aarti Industries, Bajaj Electricals and APL Apollo Tubes with a 16% return on an average, followed by SRF, PNG Healthcare, Mindtree as well as Godrej Properties, which have also surged about 13 to 15% each. And then you have large cap names like Hindalco and JSW Steel that have also managed to gain about 11 to 12% each in the last 5 years on an average. As far as losers are concerned, not much to talk about except for one stock, and that is the large cap stock SBI, which has declined 5 out of 5 times with an average loss of about 2.5% in the month of April.
All right, Jayesh, thank you for that insight. Now it's time for the BNSN quiz. We asked you today, as on March 31st, which of these stocks had the highest weight on the Nifty 50 index, and the options were Reliance Industries, HDFC Bank, Infosys, as well as HDFC. And the right answer is HDFC Bank. And let's see who are the BNSN quiz champions for today. We have 3 of them. It's Kimran Hansotia, Anil Gupta, as well as Rahul Agarwal. Congratulations to all 3 of you for guessing that answer absolutely right.
That was a bit of a trick question there, but congratulations to whoever got it right. On that note, thank you so much for tuning in, and do stay tuned. There's lots more coming up over the course of today. This is ET Now.